I'll just get started with the webinar then. So welcome everyone to the John Aussie webinar. And we have a few people as well who've attended our last webinar, the Hidden Talents one as well in here. So welcome to everyone. So I will just get started by saying who I am and what we are doing today and some background information on AudaCity Capital. So my name is Leah and I'm from the PR department of AudaCity Capital. And here's some background information that some of you may know about AudaCity Capital and some of you may not. So we are AudaCity Capital, a prop trading firm founded in 2012 and located in central London. We primarily operate the foreign exchange market, but as a company, we also trade equities and commodities. We currently have over 800 traders on our funded trader program, with traders on various account sizes from 15,000 to 500,000. So we run two programs here at AudaCity Capital, the funded trader program, which is for experienced traders who lack the capital to gain the profit they want, which we provide them the capital to start doing this. And our second program is the Hidden Talents program, which is for traders who have little to no experience in the industry. And John will train them up that allows them to gain the professional skills needed to become a trader. So I am shortly going to hand over to John, our head of trading at AudaCity Capital, who will begin the main part of this webinar. And we've collected some of your questions from the app as well. So we can answer them at the end. And if anyone has any other questions throughout, then we will answer them at the end. So just write them in the chat. So with that, I'll hand over to John, who can begin the webinar. And again, if you have any questions, just write them and we'll answer them at the end. So over to you, John.
All right, cool. Can I screen share? You've disabled my screen sharing feature. I can't.
1 second.
Yeah, just make me the host, and I'll get started. Still not. Okay, that's fine. Just give me a second. Just give me a second. Okay. Okay. Okay, just give me a second. All right, good evening, everyone. I'm John Aussie from AudaCity Capital. Some of you know me from a personal point of view, and some people know me from the AudaCity app, and some of you guys know me from YouTube. This evening, I'll be sharing some key fundamentals and a few technicals and a few tips on how to be more consistent trading the FX markets, whether you're trading for AudaCity Capital or whether you're trading your personal accounts. So I'll be sharing a few tips, and at the end, I'll take a few questions as well. And at the end, as I promised on the app, I'll be sharing a gift for everybody that attends and stays to the very end. So please look forward to that. So without further ado, I'll start the presentation. Okay. All right, this is myself. Sorry, it's gone too fast. Sorry. This is myself, John Aussie. AudaCity Capital. I'm the head of training and development at AudaCity Capital. I've been with AudaCity Capital for just over 18 months, going 2 years in the summer. That's my contact details at AudaCity Capital. If anybody likes to reach out to me via email, or you like mentoring on the private side, or you need tips on your trading, or you just need to have a conversation, you can contact me at training@audacitycapital.co.uk, or you can contact me through my colleague Leah or Oreo or any of the team members on the AudaCity app. I'm very active on Twitter. I normally post some of my ideas and some of my trades, so you can follow me on Twitter. I've not used it in a while, but I'm now very active moving forward. So you can see some of my ideas and some of my trades on Twitter, on my Twitter account. At present, we're currently in a lockdown pandemic, and a lot of lessons can be learned from COVID-19 and the pandemic. Life is too short. Our jobs are temporary. Health is now the greatest asset, which is wealth on its own, because some people are getting corona, some people are having underlying medical conditions. Life is not the same anymore. So what do you do when you cannot work? You cannot pay your bills. You cannot earn a living. You cannot travel. You're restricted on living the way you want to live. What do? You can't save money if you're not making no money. So this is just one thing I'd like everyone to think about. What's the way forward? These are 5 tips I share on a regular basis in my inner circle and with my friends. During the pandemic, this is the 5 top tips I give people to survive. Invest in yourself, whether it's education, whether it's learning a new skill set like coding, programming, or even trading FX or trading stocks, trading cryptos, investing in ETFs. Invest in yourself because your earning power will only be your greatest asset. Adopt a steward mentality. Basically, have a positive mindset, have a positive outlook on life, knowing that no matter what the challenge is, you're going to survive, you're going to make it. Create a budget because you're not earning money like you used to earn money. Money's not coming in consistently. So learn to live within your means. Then, whatever's extra now, use that to enhance yourself, start something to make you more money. So as I say in business, when you can solve problems, you get paid. There are a lot of problems out there right now in the economy. People are furloughed, people are not working, but at the same time, people need to survive. Some people can't go to restaurants. Maybe if you're a good cook, you can start a home business making food and selling it. People want to eat, people need to work, maybe people need transportation, maybe people need to get parcels from A to B. These are all problems that you can solve to make money, and that money you make, you can use that to invest in yourself to make more money. So that's just an example. Always save for your short-term goals and always invest for your long-term vision. Like always think ahead. Right now we're in 2020. Now, unfortunately, we're all in the pandemic. So you need to start thinking of a short-term situation, how you're going to survive, and a long-term situation, how you're going to be sustainable, that you will not be back into the situation again. So these are just 2 things I would like to share. And just when you're going through this presentation and while you're watching me present what I'm going to present, just have these 2 concepts at the back of your head. And I'm pretty much sure you're going to get some value tonight that will make you change your mindset in your attitudes towards investing and your attitude in terms of managing your finances. Trading. A lot of people ask me questions. How can I trade and I have a full-time job? I have I have childcare issues. It's very easy to trade within anything you're doing. One, dedication is a key thing. Spend 20, 30 minutes a day growing on your trading knowledge. Now we have so many social media platforms out there. We have YouTube, we have Udemy, we have Amazon Kindle, we have Amazon books, we have a wealth of knowledge out there on the internet. So help yourself to this free information, but at the same time, there's a lot of information, and half of the information out there is just repetitive. You need to learn how to take what is key to you, find a mentor that you can shadow who can help you build that confidence in the lane or the area you like to focus on, whether you want to learn cryptocurrencies. Find a mentor who's a specialist in cryptocurrencies, read about cryptocurrencies, and have a passion for it, because when you have a passion for it and you enjoy it, you're clearly going to enjoy the journey and you're going to be successful. Focus. If you can't give it your full attention, 110%, not even 100, I'll say 110%, because 100% is standard, but you need a little extra 10% to stay focused, whether you don't want a distraction, you just want to have that laser focus target on what you want to do. And that extra 10% would give you that discipline to make sure you get the right results. Moving on to discipline, as I just said, find a strategy that works for you in any climate and stick to it. Let me give an example. Today, I was with a few traders on the Hidden Talents program. We were trading the Euro US dollar, and I told them, when you trade, always look at the time frame in question. If it's a daily time frame, the 4-hour time frame, always stick to the time frame that's relevant to your trading plan. Stick to it no matter what, and you'll notice even if it doesn't work out today, it always work out tomorrow or the day after. But it's all about consistency, because if you can't stick to one strategy or one thing that works for you and you keep interchanging between RSI, MACD, Bollinger Bands, supply and demand, key support and resistance levels and whatsoever, you're always going to run into problems. So it's like you're running around in a maze like a rat. Always stick to what you know and be disciplined. Humility. When you win, celebrate your success. Pay yourself first. Warren Buffett says that. Gratitude. Because when you're successful, even if you're making 10 pips, take something for yourself. Because that gratitude, well, I made it. I'm successful. That's how you build your confidence moving forward, going on to bigger trades. So this is how you trade while you have a job and while you have other commitments. You don't have to spend 10 hours in front of the screen like we do a normal day job. You can trade 2-3 hours a day. Believe it or not, it only takes me an hour tops, half an hour in the morning, half an hour in the evening. That's my trading done. The people who work with me in my personal circle and the Hidden Talents program would tell you, I spend more time coaching and mentoring than I actually do trading. And people say, when do you trade? I trade when you guys are sleeping. I have my strategy. I trade on the higher time frames, and I'm very consistent. I do have losses like everyone else, but overall, I'm consistent because I follow my rules, just like I'm sharing with you now. On to the next slide. How much do you need to start trading Forex? The good thing about AudaCity, as my colleague Leah mentioned, we give you capital to trade. So if capital is a problem, oh, I have no money, I've got knowledge in Forex, but I haven't got money to trade Forex. Well, there are two ways. You can either come on the Hidden Talents program and be mentored by me and learn by me for 4 weeks remotely or in the offices when the pandemic is over, or we can work remotely anywhere in the world, it works. After 4 weeks, you have $15,000 to prove yourself. And as you hit your target levels, as my colleague must have mentioned on the Hidden Talent program prior to me coming on board, if you'd like to know more about the Hidden Talent program or the Funded Trader program, speak to my colleague Oriel. Oriel will be more than happy to help you out, as well as Diego. They're very active on the app as well. So if that's something that will be of interest to you at the end of the presentation, or during the Q&A, I'm happy to answer that as well. So you can start trading Forex with as little as $500 in your account. If you want to day trade futures, that's a bit advanced. So I'll leave this apart, but I use this presentation for someone else as well. But this is at a later stage when you become more consistent. So what you need to understand is we just want to focus on this box here right now, Forex. Stocks, futures, and options, they come later on, because when you master Forex, you can trade day futures. And when you trade futures, you can trade options. And when you trade options, you can trade stocks. I know a lot of people probably got involved on AMC and GameStop a few weeks ago. I was involved as well. But I was smart to come out of the market at the right time based on my knowledge of technical analysis, not necessarily fundamentals. I saw price was at a clear level of value and I decided to buy in, and the hype, FOMO, and people pushed the price up and I came out. I wasn't greedy. I made a little change on it and I moved on from it. Some people decide, oh, it's going to go up, it's going to go to $100, jumped on the bandwagon and lost money. So this is something I'll be pointing out as well in trading. Don't be greedy. FOMO, the end of this presentation where I'll be covering psychology and mindset, I'll be talking more about that FOMO syndrome as well. Day trading. A lot of us are day traders. How do you start your day when you want to trade the financial markets or the FX markets? You build a watch list. You identify your patterns, your setups. Maybe your setup could be, I don't know, RSI and MACD with an inside bar or an engulfing bar, or it could be a piercing bar. It could be anything, but just have the pattern. Just have a pattern, something. Just have a list of things you look for when you want to trade the markets. Enter with proper money management, which is very key. Watch price like a hawk, price action. I always use price action. Exit at your target level, or stop loss if your trade doesn't work out. What are the basics behind day trading? It's very simple. Cut your losses short, protect and preserve your capital and grow it. Always preserve the balance. Don't look to, oh, I need to grow my account by 10%, 100%. Always learn how to manage risk first. When you manage risk first, your profits will always be exponential. Also, journal your trades. It's a mental block, because when you measure your trades in terms of success and not being successful, it's a mental block. You know what you've done wrong, and you can always learn from your mistakes. So I trade journal myself, and I always recommend the trade to my traders as well. Always make a log of all your successful trades and your unsuccessful trades, because learning from your mistakes will always make you a better trader and always make you more money in the long term than in the short term. Build a watch list. Find a strategy that has an edge and fits your personality. If you are a swing trader, build a strategy that suits that style of trading. If you're a scalper, build a strategy that fits scalping. And if you're a swing position trader, build a strategy that fits that, because all strategies they will complement a time frame. My preference is the 8-hour time frame and the daily time frame. Some people, not a lot of people trade the 8-hour time frame. I'll give an example of a trade shortly, but the 8-hour time frame is very consistent for me because I only need to look at the market 3 times a day: 10 o'clock at night, 6 o'clock in the morning, 4 o'clock in the afternoon. My trading's done. Any one of these 3-hour slots within 8 hours, I can pick my trade in the first 8, second 8, or third 8, and I'm done for the day. So an example will be shown as well. Always control your emotions. Don't get emotional about a trade, because when you get emotional about a trade, clearly you've done something wrong. You violate one of your rules of your trading plan, because you cannot make money when you're emotional. So let your trading be non-emotional and don't be emotional attacked. The whole idea of trading is preserve the balance and always have enough capital to see another day, not just blow your account. Let's say you got $15,000 and you have a drawdown of 10%, which is 1,500. Do not risk all your capital, the 1,500, and you can't trade tomorrow. What's the point? Because if you lost all your money on Monday and on Tuesday, there's a clear setup on a gold chart or on the Euro US dollar for 100 pips. Unfortunately, you can't take advantage of that because you've used all your capital on a bad trade. So rule of thumb, control your emotions. If you control your emotions, you automatically preserve your capital and not get into a situation of being in a negative deficit. As I said, we have different types of traders. We have scalpers. They open and close positions within seconds and minutes. We have day traders who open and close trades on a single day. We have swing traders who hold trades between 1 and 4 days, and we have position traders who hold trades for months and years. Personally, I used to have a strategy called the carry trade, where I trade with 5 figures on a trade like the Aussie yen or the CAD yen, whereas I just need the pair to be on a long-term downtrend. I'll be earning interest overnight, and I'll be earning the potential gain as well. So when you have certain trades where you're paying a swap that is positive, negative, where you're paying a swap to a broker, this time the broker would give you interest for holding that position. But I've not traded like that in quite a long time, but it's still possible with the right market conditions. But that's something I do discuss on the Hidden Talents program. What's your style and strategy of trading? As we mentioned before, Forex style trading. Do you scalp? Are you a day trader? Are you a swing trader, or you're a position trader? And when we look at the strategy complementing the Forex style, if you're scalping, you're going from zone to zone, probably A to B. If you're day trading, we're taking price action. Then we're doing like engulfing bars, pin bars, trading at resistance levels, support levels, supply and demand levels, swing highs and swing lows, vice versa. Swing trading, we're trading through EMA crosses, SMA crosses. A few people have asked me a few questions on the back end. What's the difference between an EMA and SMA? Well, tonight I'll explain that to you in depth during this presentation as well. Position trading. What is position trading? That's trading with momentum. For example, all the FTP traders on our books that have been hitting 10%, I can tell you, I've reviewed a few videos on YouTube. Leah's posted a few in the last few days. The most common pair people are making a lot of money on are pound US dollar, pound Australian dollar, and pound yen. I've just given something away. If you're very consistent, pound US dollar, pound Australian dollar, and pound yen are the 3 consistent pairs I've seen at least I'll say about 75% of the traders hitting their 10% targets in the last 8 weeks. I've been trading these 3 pairs because I study all the books. I have my access to my FX book where I see all the traders who've hit their percentages, and I review all your trades as much as they are 500s, 200s, and 400s. I use that as a template for the people on the Hidden Talents program. So I know who's trading what, and I know who's trading what strategy, and I have an idea of what's gone wrong. But obviously I don't mention names, but I use that as a learning example for others to learn from. We mentioned a trading plan. The trading journal, let's go a bit in depth here now. Every trading plan, every journal must have 5 columns. The currency pair, the direction, are you going long or short, the amount of pips you've gained or lost, the amount of screenshots of a chart, and comments. Did the trade go well? Did the trade do all right? What's the reason? And part of why I said there's a surprise tonight, I am going to share a trading plan with everyone for free. Just for attending the first giveaway I'll give everybody tonight would be a trading plan. The second surprise I'll reveal at the end of the presentation. So the first giveaway, as I've mentioned now, there are 2. The first one I'm giving away right now would be a trading plan. So everybody who wants that trading plan, contact Leah or send me a message with your email. I would make that trading plan available to you, or I'll actually share this trading plan live on air through the chat app later on at the end of the presentation. So these are the 5 things we need as a journal when we're writing our trading plan. Now, what are the steps for taking a trade? All of us can trade. Let's not take anything away from that. We can all trade the financial markets. We're all talented. We know how to trade the markets. But how many of us can actually keep consistent profit? This is where the challenge is. How many of us can make consistent profit? So the first step, we have to adopt a strategy that resonates with us. What strategy works for me? What strategy complements what I'm trying to do? The second part, set your trading goals. Am I going for 20 pips? Am I going for 40 pips? Am I going for 100 pips? I normally tell my traders, target 2 to 1 as standard. And as you grow on, you can move from 2 to 1 to 3 to 1 to 4 to 1. I can even have trades of 4, 5, 6, 7, 8 to 1. But always set the benchmark at 2 to 1. So for every dollar you're risking, you're getting 2 times back. So if you're risking $10 and you lose a trade, you lost $10. But if you win another trade, you're getting $20, you break even. Example, how much do you risk? You risk 2% per trade. It's up to you. Do you choose 2 to 3 to 4 pairs? It's up to you. Do you take 1 or 2 trades a day? It's up to you. Practice your strategy thoroughly through backtesting and get that confidence it works. Evaluate yourself in terms of your trading, your psychology, your mindset, your emotional mindset. Then start trading. Then it's all about trade, learn, and earn. You learn from your trade if it's a bad trade, and if you make profit, you earn from the trade. It's just as simple as that. Because if you don't take the trade, how are you going to learn? How are you going to make profit? So the key takeaway from here is take action. You cannot lose money by learning from mistakes. You can lose money, but overall, you'll be very successful in the long run if you learn from your mistakes. Okay, move on to the next slide. These are the 8 major currency pairs. Sorry, jumping. Let's go quickly. These are the 8 major currency pairs. We have the Australian dollar, the Canadian dollar, the Swiss franc, the euro, British pound, New Zealand dollar, Japanese yen, and United States dollar. So I'm just going to annotate. Personally, I like to trade. If I was to pick my pairs. So I like to trade in each box. So normally here, Australian dollar is one of my favorite pairs. Pound AUD. I don't take more than 2 from a box. CAD yen, I love the CAD yen. And I like to trade the CAD CHF as well, because the CAD CHF is a cross pair, but Doesn't move a lot, but very good for swing trading. The Swiss franc pairs, I'm not really a big fan apart from the CAD CHF. So if I miss an entry on the CAD CHF, I'll probably be looking at the Australian dollar CHF, but I won't be looking at anything else apart from that. That's just based on my preference and experience, spread, volatility, and my style of trading. On the euro, definitely I love to trade euro pound, euro yen, euro dollar. Sometimes I can play with euro CAD, but I'm not really a big fan of that. So I'll take 3 from this pair. Coming on to the pound pairs, as I said, some of them are repetitive because I've already mentioned them there before, but pound one, pound yen. Maybe once in a while I can take a pound CAD, once in a while, but not very often. But if I take pound CAD, I'm not taking pound AUD. Pound US dollar, it depends. I normally rotate between pound US dollar and the euro US dollar. It all depends on my style of trading, if I miss the position or what the market is saying, or in terms of opportunity of pips. As I said, with the New Zealand dollar, I'm very cautious and I don't really like trading anything NZD. But if I was to trade the New Zealand dollar pair, it will only be the Australian dollar, New Zealand dollar, or the New Zealand dollar yen. Yen pairs, I trade everything. I trade all yen pairs. I love trading the yen pairs because the yen pairs suit my style of trading. The dollar pairs is very simple. 1, 2, 3, 4. Sometimes I hate the US dollar CAD for various reasons because sometimes it plays a lot of games. But at the end of the day, these pairs make my watch list. And now my watch list, I go for my best 7. That's it. All the rest, I just use them for examples with my traders. But I take my best 7. That's it. Just simple. So this is how I build my watch list. But the criteria for selecting them, that's another presentation on its own. But I explained that on the Hidden Talents program, if that would be something of interest to you. Now, when we're executing trades now, this is another key thing I like to bring to your attention. Trading plan. This is the trading plan summarized in one go. Some of you probably seen something similar on the internet. Before you execute a trade, identify the pairs you want to trade. I've done that. Identify the market trend, the market structure. Is it bullish? Okay, fine. But before I go any further, what fundamentals are coming out during the day or the week NFP, not oil inventory reports, Draghi speaking, FOMC, vice versa. That will determine what trades and what pairs we're trading. Then are we in a bullish market after identifying the trend? Is price at level of support? Yes. I'm buying. Trade done. Price is not support level. Price is in the middle. Price is at support? No. Middle? I wait. No trade. Price is ranging, so I wait for a breakout. Price is bearish? Fine. Is price at resistance level? Yes. I'm selling on the candle close. Is price at resistance level? No. I'm waiting. It's just that simple. This takes out all the guesswork in trading. All the guesswork. So just a simple, straightforward template to help you with your trading. Moving on to the next slide. We have 3 main market conditions, as I mentioned before. When the market's bullish, as we can see, market's going up, down, up. We see the momentum, looking for buy opportunities at support levels. This is a low, this is a low, this is a low. Then a neutral market, the market is not going up or down, it's just ranging. There's no clear direction. I stay away from it. Bearish market, you see a top, drop. So it's always important to distinguish between the markets in terms of market structure. How do you find the trend? You can use trend lines, you can use moving averages, which I talk about in depth later on, and market structure. Higher highs and higher lows, and lower lows and lower highs, which complements Dow theory. We establish if the market is trending upwards, downwards, or sideways. Getting into the market entries. Someone's like, hey, Jay, how do you get into the market? What's your strategy? What's the entry? There's not really a perfect way of getting into the market. You can get into the market a combination of ways. It's all about confluence. The more reasons you can validate a trade, the more successful that trade is going to be. Some people like to entry market open. This is a pin bar. You got a bearish candlestick pattern here. People, oh, pin bar, okay, it's bearish, I'm going to sell straight away. Next candle opens, you're in profit. But I like to wait for the candle close. You see the candle close here, right? Candle opened at the bottom, closed here. But if I see this is our resistance level, let me just annotate here. If this is a resistance level right here, then as soon as the candle closes here, I'm selling. Now I'll put my risk reward 2 to 1, get my risk. If this risk is about, let's say for argument's sake, let's just say 25 pips. Let's just say 25 pips. Minimum target, I need 50. I'm not taking the trade if I can't get 50 pips. So I need at least 50 pips. So let's say 50 pips is about here. So prior to doing that, then I look to my left. Where was the support? You see on the left, this is my support level. So basically, this is a filter I use, and I tell my traders, and please take a note of this. This will get you out of trouble as well if you're in a bad trade. I said 2 to 1. If 2 to 1 is beyond this line here, beyond the support, it's not a valid trade for me. But if my 2 to 1 is within this line, just before the close here, the open here, I've got a valid trade. So this is just one way of me trading and getting out of trouble. It's a clear, simple strategy. Simple. And that's what I'll do on the other side as well. Break. The only difference with the break is I waited for the market to close and entered here. Here, the break is as soon as the market touched the level, I saw the market straight away. That's the only difference. But the only thing I don't like about buying on the break, price might drop down and all of a sudden, boom, price can just decide to do this. Tail up. And there's nothing I can do. So I like confirmation before I execute. So in other words, I like confirmation before I pull the trigger. Next slide. Swing trading. People swing trade. There are 3 main methods of swing trading. If you don't know how to swing trade, this is the perfect template for you. Stock in a box, range and market. Swing high, this is your resistance. Swing low, your support. As you can see, we've got an indecision bar here. Prices rallied down, formed a bottom here, like a tweezer bottom here. I'll get in because you see I've got a bearish pin bar and I got a wick at the bottom. If you don't understand wicks, I'll explain wicks later on moving forward. I see a rejection. So I'll put my support line here and I'll target the previous high, which is up here. So all I'm saying, this is basically, it's a straightforward template. Put your support here. Take the market here. I'm just going to target the previous high. And you can see exit, simple, on any time frame. Moving on to the second one, look at here. Entry, previous resistance, as I said. Support at the bottom, you see. That's it. So when price comes up here, we're looking to sell. So when price is at resistance level, I'm looking for sell opportunities here. And when price is here, I'm looking for buy opportunities here. I'm looking for candlesticks to tell me what to do. And the third one, fade the move. Strong price rejection here, 1, 2. Then what am I going to do? I'm going to take it back down here, swing low. So you either go over range, catch the wave, or fade the move. So getting stuck in a box, that's trading in a range market when the market's sideways. Catch the wave, this is when the market is trending up or down, as you can see from here. Fade the move is when you're trading against the momentum, trading against the trend. So you can swing trade in any one of these three scenarios and still be successful. So like I said, this will really help you if you follow this template in terms of following your swing trading strategies, if you are swing traders, and add your confluence, your RSIs or whatever. Personally, I don't use indicators to trade, but if you use indicators, this will only help you, give you more confidence to validate your trade. Okay, we talked about getting into the market, pullbacks. Pullbacks are second chances to get into the market. It's like you want to buy a pair of Louis Vuittons. Oh, but it's been discounted by 40%, but you missed the sale and it's gone back to full price. So, you know, during the summer now, when the new line of Louis Vuittons come back in stock, you have the opportunity to buy the old ones at a discount. So you hold on to your money. So a pullback is like that, a second opportunity to purchase what you want. So if you want to go short on the market, you've missed the short opportunity. The pullback is an opportunity for you to get back into the market. As you can see, the market's rallied up, formed support, price has taken off. The pullback now would be what? Here, the price has gone up. See, the initial move is here, A, came at B, came back down here, C. You see, when you look at wicks on the market, let me just give you a key takeaway here. Wicks show you hesitation. When you see a wick from the downside, just know it's rejecting support and it's going up. And when you see wicks from an upside, it's rejecting resistance and price is looking to come down. And look at several wicks here. This tells you that price is hesitating on this zone. So if price is hesitating on this zone, get ready to buy back again and see what happened. Price came back to this key level. Normally you have sold here, bought here. Price has done what? Done this. Let's get that. So the price has gone up. Now price has come back down for you. Now this is your perfect opportunity to then what? Take your long. Because what's price done? Price has broken out the range. Look at the bearish pin bar, wick, engulfing bar, taking out these zones here with a doji here. And here you go. Pulled back down one more time. Took out the liquidity hunt and went back up again. Liquidity hunts are not an advanced concept, which I teach on a personal side, but that comes from experience. But liquidity hunt, if you want to know what a stop hunt is, you can go on YouTube or you can contact me directly. If I've got time, I can show you what a liquidity hunt is or what a stop hunt is. Basically, when you take a trade, it's basically the market taking out your stop loss only for the market to go back in your original direction and hit your take profit. So the market hits your take profit and your stop loss at the same time. That's all it is. So types of pullbacks, as you can find them on support and resistance levels, demand levels, and double bottoms. I'm going to show you a concept of trading M and W. Double bottoms and double tops are very good structures of trading the market. So just pay attention to when we get to that section. That will help you as well. So this is on pullbacks. We have 5 main tools for technical analysis, which I mentioned before: price action, support and resistance, trend lines, Fibonacci, and chart patterns. As a trader, you need to know all these 5. You can't discount any one of these 5 TAs. And all these 5 TAs will help you with your trading plan as well. Personally, I don't know any trader that doesn't use any 5. They all come part of your trading plan one way or the other. So just something to understand. And if you're a new trader, this is a perfect webinar for you to have a foundation to build upon. Resistance. Just as I said before, price hits a resistance, entry level and break, and it's a candlestick pattern. We only use this to validate our trade to see bearish momentum after a shooting star. So on the internet, there's a PDF called the Candlestick Bible. Go and look for it. It's free. The Candlestick Bible will teach you everything you need to know about candlestick patterns. All right, down here it's called the Candlestick Bible. It's free on the internet. I share it with traders. It's there. It's called the Candlestick Bible. Every trader I know that I've come across has read it. The Candlestick Bible. That'll teach you everything you need to know about candlesticks. Moving on. So that's that. So we got a trend line as well set up. Looking at trend line setups, we have, as I said, lower highs. Can you see we've got lower lows and lower highs? Can you see how we have the trend line and we've got the rejections? This is a strategy as well. People trade trend line rejections. They look at charts and look for these setups. Lower high, entry, pin bar, engulfing bar, rejection and resistance, easy to go. I'm going to share about 14 market structures with you on this webinar. I'll show 14 template strategies that you can make money with straight away if you follow them and study them and incorporate them. The only difference would be what time frame you take them on. So I'm going to share at least 14. So there's no way you're going to walk away from this webinar without getting value. Fibonacci. We have two types of Fibonacci. We have the retracements and we have the extensions. What's a retracement? Price has gone down. Retracement is the pullback, price is coming up. So think of this move as 100%. So a Fibonacci retracement will always retrace to at least 50% of that move. And let's call this 50% here of that 100% move. So basically, the 50% gives us the opportunity for the continuation. So prices come from A to B, 100% in a downtrend. Now prices now try to reverse and start uptrend, but hesitated at 50% of the 100% move. And you can see that's around the 61.8 level just here. You see the wicks, it's actually on the 50, multiple wicks here. And what's price done? Price is now carried on. So this A, B, C, simple. The Fibonacci extension, this is just a continuation, but the opposite, prices rally from A to B, rallied up again to 50% level, and now going back in the original direction of the original trend. Can you see? So it's just a hesitation. So price was going down, pulled back up and down. But in this case as well, prices come down, up, rally down till it forms a lower low, and it's going to go back up. So a retracement is used to determine where we enter the trade, and the Fibonacci extension is used for when we take profit, maximum take profit levels. So they're very useful and very strong tools in putting onto your price plan and your trading strategies, because combining both of them together, your success rate goes through the roof. Totally through the roof. So something to make a note of: Fibonacci extensions and retracements. Trendline trend, as we mentioned that before, we've gone back. So using Fibonacci with support and resistance, that works as well. And I mentioned the M pattern before. Let's go back here, quick here. Yep. Let's wait for that. Yep. Using Fibonacci with support and resistance can be, we're going too fast. Just give me a second. Just give me a second. We're going too fast here. Just give me a second. Okay, we're going too fast. Yep, okay. Here we are. So M patterns and W patterns. As I mentioned before, oh, come on. Just give me a second. Just give me a second. We're just freezing up. Just bear with me a second, please. Okay, guys, my apologies. We're back. Just had to reload that slide manually. So support and resistance. So we find a support line and a resistance line, and we put the Fibonacci. And as you can see, the key resistance level lies on the 50% level, and you can see that's a support level, and price goes up. So Fibonacci is an awesome way as well to define support and resistance levels and gauge when you want to get in and out of the market. So this is another use of using Fibonacci. M&W patterns. M&W patterns are very simple. Basically, when you look at price action, so this is from maybe this is a high and this is a previous high, and you're waiting for the candle to close beneath on the second leg. So this is the initial impulsive move. Prices retrace down, and now price has come to test the previous high, but cannot break higher than that. So what you're looking for as a price action trader is to buy the break of the middle bit, which is here, and this is what the M is, and it comes in various forms. I'll give an example of this later on. So M&W patterns are very simple, but sometimes they're not that straightforward. But the most important thing is you need to find the major impulsive move of the trend, the uptrend here. Then you wait for the pullback. Then you need to wait for the trend to resume in the original direction. So this is the uptrend here. So you need to see the uptrend come to an end, and that's where you get the second leg, and vice versa of the W. So the M is when it's on the resistance side. The W is when we want to be on the buy side. So that's the M&W pattern. Very simple, very effective, and a very good pattern to trade. So something to just bear in mind, and it helps a lot. So we move on to the next slide. Again, next slide. Sorry. So trading with candlestick patterns now. Yeah, don't know, just give me a second. Yeah, trading with candlestick patterns. Let's just get here. Just give me a second. Just give me a second. Let's go. Trading candlestick patterns. Yep, trading with candlestick patterns. So the next part where we are now, trading with candlestick patterns. This is where I share those 14 templates, as I promised before, on how to trade and make money straight away. So as a trader, these are the patterns I believe every trader should be aware of and should know. Raising wedges, bearish patterns, vice versa. So we're going to look at them one by one. Pullback of a trend. The market's on a downtrend. Price has pulled up. 2 weeks, bullish tweezer top. Here you got a bearish candle, followed by a bullish candle, followed by an engulfing candle. Rule of thumb. A lot of people don't know this, but I'm actually going to put a note here and mention it. When you see a tweezer top, tweezer bottom or top, they are followed by engulfing bars. So, and highly effective at swing highs or lows. Just bear that in mind. At swing point highs and lows, they're very effective. As you can see, a tweezer bottom, engulfing bar. So they're very effective. So just bear that in mind when you're trading the markets. You cannot go wrong. So that's another key takeaway you might want to put down in your trading plan, and just observe when you're trading the markets. That's very effective. Next slide, the bearish engulfing bar. We have a key resistance level, bullish pin bar, bearish bar. The engulfing bar what is an engulfing bar? An engulfing bar is a bar that overshadows a previous bar. So you see the resistance, you see price going up. So this is the confirmation now price has rejected it. So what are we going to do? On the next candle, you just put your sell. You sell your candlestick right here on the open of the next candle, which is there. Put your stop loss up there. And I normally target first take profit one will be previous swing low, followed by second one here if there is. So that's a simple trade for me. So imagine you're taking this on a daily time frame. That's why I put 2-day candles. So you're waiting for 10 o'clock each day. A lot of you guys, I don't know if you use TradingView, but 2200 hours GMT, go use the FXCM feed on TradingView. TradingView. That's the new daily candle. So just make your analysis of that. You cannot go wrong. You cannot go wrong, because if this is a 2-day candle, day one, day two. So all I'm doing is just checking the market 10 o'clock every day. So let's say for argument's sake, this is, I'll say 40 pips. Yep. So 40 pips, we need to make it a bit dark. So let's go with black, 40 pips. So I need what? 80 pips. So let's say my 80 pips will be about here. Chances are I can be successful there. So what about if this total move from top to bottom, and this can be an extra 40 pips. So some people ask me, what do I do? I can't hold my trades for long. Maybe yes, you can't hold your trades for long on the daily chart, but you know the key reversal points on when to get in and out of the market. And if you're trading on a cross pair where, you know, a lot of people, if you're on the Hidden Talents program or the FTP program, the risk manager is more flexible with you trading cross pairs and holding them over the weekend than any pair with the pound and US dollar. All you have to do is email support at AudaCity Capital and ask for an extension to hold the trade over the weekend, and your trade will not be closed. And you can make your consistent profits that way. So this is just one example of trading using the bearish engulfing bar. The bearish engulfing bar is a very, very consistent trading pattern and works a lot. And it's made me a lot of money. We move on to the second part, which is the opposite, the bullish engulfing bar. The bullish engulfing bar is the opposite, 2-day candle, as you can see. Let's come back here. You can see 2-day candle engulfs the previous one. Right, let's go, engulfs the previous one. And as we can see, what happens? Price goes all the way up. So same situation as before. We buy into the market here at the open. We target previous high here 1, and this is the next take profit level 2. So these are very clear, simple strategies you can actually make money with day one. You can take these on the 1 daily chart, as you see here, and on the 1 hour time frame. Very easy, simple strategies I'm sharing with you tonight. So just bear in mind when you're trading the market and look for these patterns. They're all over the market, all over. You just need to have a time frame and be consistent. That's it. Inverse hammer. Same thing, resistance. And if you've noticed the theme of trading, we're only trading from the extreme top and extreme bottom. Can you see? Rejection. Support down here. So same thing. You're just going to target 2 to 1 here. And you get your profit. See? It's always found at the end of an uptrend, the trend's going up, closed. So another example. So we have all these candlestick patterns that are there for you. and they're just there for you to help you and make money. At the end of the day, the most important thing is you making that decision. The doji, I love the dojis. Big upper body shows you a strong rejection from the upside. And as you can see, these are found at end of trends, body, wick. Simple thing, same concept as I showed you before. Dragonfly doji, same thing as well. The Dragonfly doji is found at a support level. And as you can see, stop loss is at the bottom here of the engulfing bar. Entry, you can just get on the previous close here. Target, previous high here, 2 to 1 is great. If you can't see the top here, I'm not saying we can see the pass, so I normally use Fibonacci and get the extension. So the main thing here is securing 2 to 1. The bearish harami, some people trade it. Solid green candle, bearish candle here. Same thing, same concept. You can have your resistance level up here. Have your support down here. And clearly take your 2 to 1. Very low stop loss here. And this is where you normally have the mega rewards, 7 to 1, 5 to 1. And you can have a massive take profit level here. So if you've got a deficit and you can spot this on a daily 1 hour time frame, see these, I've even made it here clear for you. These can be found on the half an hour to 4 hour time frames. Let me clear that out so you can see this. I'm giving you guys a lot of takeaways here tonight, and I really hope tomorrow morning people are going to be making profit. So you can find these patterns on the half an hour to the 4 hour time frames. Very key and very easy. You make a lot of money if you're consistent. So these are things you need to look for. If you want to know these in depth, then the Hidden Talents program, I teach everything. I even give you a resource to my Google OneDrive where you have videos and you have my previous teachings and my trades as well. So these are all things you can look at when you're on the Hidden Talents program. Or the bullish harami is more or less similar to the same thing as the bearish harami. It's just in the opposite direction. Dark cloud cover, a lot of people trade this and a lot of people are aware of this, and this is a very simple strategy as well. So you have the bullish and you have the bearish version. So from the bullish side, we're taking it downwards. For the bearish side, we're taking from upwards, and you see it's a 2-day candle pattern found at the end of an uptrend. So most of these candlestick patterns and market structures I'm sharing with you are found at the end of downtrends and uptrends. So for example, let's say the Euro US dollar is on a heavy downtrend. Oh, I missed it. That's fine. You can get the next best thing, taking the big move going back up. So it's not about missing the trade. It's knowing the right way, the right specific point to get in and get out. It's just that simple. Once you know how to get in and out of the market, you'll be very successful and more consistent. Piercing pattern, one of my favorite patterns as well. And if you've noticed, I'm always using these patterns over 2 days. So 2 days, 1 day, the signal's there. 2nd day is for confirmation. 3rd day is for your entry. The reason why I use 2 days is consistency. So we don't have any guesswork here. And when you trade on the higher time frames, you're more consistent with your results. So this can be found anywhere from the half an hour to the 4 hour and to the daily time frames. So know where to find them and know what time frames to trade them on. So 30 minutes up to D1. Please do not trade these patterns anywhere below 30 minutes. You're going to get yourself burnt. They're only valid on half an hour time frames to daily time frames. And in order to do that as well, it takes a different level of an approach. You need to put top-down analysis, which is another thing I go on to teach on Hidden Talents program. So I'm just giving you a summary of how to get into the market, but now to execute the theory behind it, that's another webinar session. But I did say this is just part one. I have at least 250 slides to share, but I cannot share 250 slides on one night. So tonight, I'm only going to share 102. The rest will be on part two sometime in March. So I done the first webinar with Leah last month, and the response was great. And the demand made me sit down with Leah, and we decided to do another two, but we split them between February and March, and we see how people like it. And if you like it, this is for you guys. Drop a review, drop your comments, tell us you like it, and we'll carry on doing them on a regular basis after March. So this is just the first one, and the next one will be sometime in March. Me and Leah will sit down and we'll decide based on the feedback and what you guys want. So if you want it, you can have it, but just always let us know you appreciate it, because we're taking time out of our days to share this content with you. And it's not just me putting the content together. All this comes down to Leah as well, because Leah's always the one on the background doing all the hard work, paneling it, getting everything on YouTube, the graphics and everything. So it works hand in hand. And I always say on every webinar, I can't take all the credit alone for what I do, because Leah is a key part of what I do. So that's why I always tell people, you have to appreciate Leah as much as you appreciate me, because if there's no Leah, there's no session tonight. So just to let you know, so Leah might not be a trader, but Leah is the next best thing to a trader, because her support is next to nothing. Without her support, I can't do this. There's no Hidden Talents program without Leah. There's no webinar without Leah. And there's no John Aussie without Leah. So at the end of the webinar, please recognize Leah for her efforts and appreciate her as I appreciate her for all she's done and her support in making this happen.
Oh,
so,
thanks, John. Thank
well, it's
you
true.
so much.
So I'm just going to take a 30-second water break. I'll be right back. All right, now we're back. Morningstar. The Morningstars are one of my favorite patterns. I have several favorite patterns, but the Morningstar is very simple. As you see, you have a bearish candle, you have a little doji in the middle, and you have a green candle. So it's kind of like a U shape, but what do you see? Two consistent green candles. The doji indecision in the middle, the engulf bar, and a confirmation bar. So you just buy at the close of the second bar and target 2-1 or the previous swing high, and they can be found at the end of a downtrend. So evening stars are found at what? Uptrends. Morning stars are found at downtrends, uptrends. I'm sorry, evening stars are found at uptrends, and morning stars are found at downtrends. So it's good morning, good night. It's just that simple. That's the best way to look at them. So moving on to the next one, evening star, as we said, good night, 12 midnight. You see we take the short, target previous low here. So same here, same candle, same opportunity, and this is how we do it. The power of news now. This is one thing I thought I'll throw in here. Let's say NFP comes out. Oh, you're not allowed to trade the news. That's fine. This is one thing I tell traders to do. Just find the highest point before the news and the lowest point, and just draw a vertical horizontal line across it, just like this. So when the news comes out, you can see this big spike right here. Now you're not trading it like straight. Oh yeah, we're gonna take noise. Don't trade the news at the top of the spike. No. You want to trade at the retracement, about 50% of this candle here, about here. And that's where you want to take it up and keep your stop loss just beneath here. So that's how you trade the news. But like I said, that's all I've shown that. So that's just one little bonus thing I'll throw in there. That's how you trade the news. So we're getting halfway through the session now. Pump and dump is a term a lot of traders say. What's pump and dump? It's normally known in stocks, but I can apply it to FX. Oh, it's going up, it's going up. No, it's going up all of a sudden. It reversed. everyone lost money because people say, oh, it's great. So maybe Boris said something and the pound started going up. But the way out of pump and dump, you can quickly follow the momentum, but the moment you see the wick forming, get out. Once you see a bullish candle and the wick forming and closes, so let's say this is the 1 hour chart and this happens, it closed here. Get out, exit the market. There's no two ways about it. Just exit, because this wick shows you rejection. So you want to exit. So if you see the big move here, yeah, you can take it up to here, that's fine. But don't think the market's going to go further up. It's going so panic selling, and what happens? The market goes down and you're holding the trade. Oh, it's going to go up, it's going to go up. You've already lost your money. The market's taking your lunch money. So these are things you just need to look at. Yep. So just that. So that's a pump and dump. So what else do we got? We have another price pattern, the V-shaped recovery. We have diagonals as well, higher high, higher lows. These are the trends we find. And you have the opposite, the bearish as well. So these are all candles that, you know, that can be traded. So like I said, these are all candlestick patterns that will make you money instantly. How to read a candlestick is very basic. You got the high, the open, the close, the low. These are things everyone should know how to do. So I always put them in my presentations. How to read a candlestick from the bullish side, that's it as well. Just simple things. Because if you don't know how to read a candlestick, then clearly you don't know how to trade. So 2-day bullish candles. To summarize everything I've said, I've just put them into little categories. So I've shown you tweezer bottoms, bullish engulfing bars, and bullish piercing bars. So these combinations are all bullish. Bearish, bullish. The next candle is going to be a bullish candle. Engulfing, bullish bear. Next one's going to be a bullish. Likewise. So this is how these candles are. And the opposite would be for the bearish candles as well. It's the opposite, bullish, bearish, next candle will be bearish. And this is how it is. So that's just a summary of what we've just shared. Double bottom, that's like the W section, as I mentioned before. So that's one leg here, the neckline here, and the W there. So that's just a double bottom. And I can probably just quickly illustrate there. And quickly illustrate that with a W if I see a pen. Yeah. So quickly illustration here. So that's one leg here. Then we get the second leg up here. Then we get the third leg down here. Then we get the last leg up there. That's a W. Then we just buy on the break of the neckline. So there you go. That's just a W. So that's just one quick way of trading a double bottom. Very simple, very easy, very straightforward. So we move on to the next candlestick, next one. Double top is the same thing, the W. So that was a W, this is the M. So same procedure. One move here, down here, up here, down here, and we just buy at the impulsive leg drop. Candlesticks. Everything I've shared with you tonight is summarized here in terms of candlesticks. Dojis, engulfing bars, hammers, stars, haramis, free white, free black, hanging man, cloud piercing patterns, tweezers, abandoned baby, marubozu. These are all the patterns you need to know as a trader. But I just say be a master of a few than a master of many. So personally, I'll just say I'll take doji, engulfing, hammer, piercing, tweezer bottoms. These are the ones I trade anyway. So that's 4, 6, 7. I'll just trade 7 patterns. But you choose what's good for you. They'll always make you money if you use them the right way with the right money management techniques. Inside bars, you have dojis, multiple bars, and other bars as well. So these are other patterns you can look at as well. Top candlestick patterns. So from resistance, this is what you're looking for. I've helped you out here. And from support levels, this is what you can get from support levels. So on the resistance levels, these are the patterns you're looking for to buy. And on the support levels, these are the resistant levels you're looking to sell. Sorry, resistant levels at the bottom is where you're looking to sell. And at support levels are where you're looking to buy. So top and bottom. So that's a good key indicator there for you. What is support and resistance? The highest part price is reached, and support is the lowest part price is reached. Master candle. That's another strategy. You have 4 candles and you find the dominant candle to enter your trade. So it's just a little simple thing I just thought I'd add to it. Wicks analysis. This is one part of the presentation I'll say everyone should really pay attention to. Wicks. Wicks and tails give a lot of information about the market structure now. Can you see wick? Wick down. Wick, wick, wick down. Can you see them? Look at the wicks at the bottom. It tells you up. It doesn't matter the pattern, but this is what you're seeing. Wicks show you rejection. So if anything, this is the most important slide of the evening, wick analysis. Once you understand wicks, you will not have a problem getting out of the market and getting into the market. Candlestick psychology. It's the same thing. I'm just going a bit more in depth. What's happening? It tells you what the candlestick's doing. Fear of the downside after a long fall, So we see these all the time. So this is what it is. So you have to understand the psychology of the candlesticks. Because if you're trading FX, you have to understand candlesticks. What candlesticks? The relationship between buyers and sellers. And the smart way to trade the candlestick pattern is simple. I've summarized the main point. Get your candlestick, check the higher time frame to see if there's synergy between the trading idea, evaluate the market to see if the trade fits the current context, reevaluate candlestick anatomy and any other signals qualifying that candlestick to be a valid trade, plan the trade, commit to trading the plan, and execute. Simple, just like that. Struct routine equals consistency equals results. And more importantly, when you're trading any time frame, wait for the candle to close. I cannot stress how important that is. Wait for the candle to close, because the last thing you want to do is have a candle go up and down and you're out of money. So trade what you see. So breaking down of time frames, you have the weekly time frames where you find your key levels, your daily time frames where you find your daily zones, gives you the key swing entry opportunities. The 4-hour charts are good for entries and good for intraday zones, and they're good for Fibonacci as well. 15-minute charts are good for price action on lower time frames, and they confirm entries. I only use anything lower than 30 for confirmation, not for actually execution of trades. Some people have trade on M1, M5. How do you plan your trading week? Make sure that you draw up your analysis for the week. Start the week with the right mind frame and the right mindset. Have a good night's rest. Keep yourself updated with news and potential volatility. Keep yourself updated with news and potential volatility as well. Just the same thing. Just keep yourself prepared. Because when you're prepared, you're not going to be panicking. You're not going to lose money. You're not going to have bad trades. But when you're unprepared, you're going to have chaos and uncertainty. Sunday night, review your trading journal. Monday, wait for the market to develop. Don't rush. Mostly on Mondays, market consolidates and manipulation of price. Tuesday, look for trading setups. Usually set up the higher low of the week, high probability. Hence the reason why I always use 2-day candles. Wednesday will be the continuation of Tuesday's momentum. Thursday, maybe continuation of price, looking for higher highs or higher lows or lower highs, expanding on price. Friday, look to exit the market, close all your runners, and just review the week. Or if you're going to hold your trade over the weekend, so be it as well. So this is just a typical way of looking at the week as a trader. And you see, we break it down again. Weekly chart, look for supply and demand areas. Take a note of the weekly high and low. Best time frame for direction, support and resistance, and liquidity areas. 4-hour chart, look for the best market structure, identifying potential trade setups. Look for rejections on the 1-hour time frame and signs of failure. And 15 minutes entry, and look for break and retest of most recent market structure levels. So these are things you look for when you're trading, and this will give you structure into the markets. Now, key thing, end of the month. I cannot stress how important this is. Check the candle close of your chosen pair end of the month and write that number down, because that number is always a magnet to price. So the last Friday or the last Monday, the last calendar month of the year, of the month, just mark down where the market closes. Maybe if the 31st is on Wednesday, at 10 o'clock, mark down that candle close, because that'll gravitate into the following month, and you see how price will be reacting along that level. So that candle close is very important. Now, trading indicators can be used for confluence. I'm not going to go very in depth on this. I'm just going to breeze through this. So confluence, what's confluence? This is where multiple trade signals line up to confirm your trade. So you have candlestick patterns, you have indicators, and you have chart patterns. That's all. When you add all three of them together, it validates your trade. Bollinger Bands, they include 3 lines, a simple moving average, an upper and lower line plotted with 2 standard deviations, and they're normally used to indicate when you should go long or short on a stock or FX pair, but people just use this for confluence. Moving averages, people have asked me about that. So you have the 5 EMA, 16, 21, 50, 100, 200. This is just a summary of what they all do, and if that helps. Bollinger Bands, as you can see, this is just a basic example of how they work. Buy, sell, but I'm not a fan of indicators, but I thought I'd just share that for people who use indicators, because I'm from a mathematical background and indicators do lag. Look at the MACD. The MACD is used to confirm trends in the price chart, and MACD consists of 2 trend lines. When 2 lines meet, it indicates the trend's reversing. So that can lag as well with price, and when it's different from price, then you have divergence. So that's another thing you can look at as well. So RSI measures the magnitude of price when it's oversold or overbought, as you can see above here. Moving averages can be used to locate dynamic support and resistance levels, and simple moving averages is for the high and lows of price, and the EMAs are for closing prices. So that's what that is. And I've just showed the difference between simple moving averages. We have react slower to price movements, might delay on a long-term trading time frame, but the EMA reacts quickly to price. You get faster signals, you have danger of fake outs, and it's for short-term trading. And ultimately, it comes down to the person's preference. So the best pairs to trade, as I mentioned before, I said pound AUD, pound US dollar, and pound yen. To keep it simple, in terms of volatility, low spreads, highly traded pairs, and least manipulation, these are the 3 pairs I recommend people trade. Euro yen, pound yen, euro dollar. Very simple, very easy. The last bit, correlations. Australian dollar, when the Aussie's up, silver's up. When the yen's down, oil's up. And when the euro's up, gold's up. So to finish off this last part, this is the last part of the slide. The rest I'll keep to the second part of the presentation. So basically, if the Australian dollar's up, so let's just say AUD. Let's just take this AUD. And after this, I'll take some questions and we end the evening. We have AUD. So if we want to trade AUD, we can have AUD US dollar. We have AUD CAD. you have AUD, CHF. So the fact that Australian dollar is strong, all these pairs would be what? Long. We're going long, bullish. And we just need price action to confirm that we're right. Then look at this, the yen's down. So if the yen's down, what does that mean? Yen, JPY down. That means every pair with the yen, like AUD, JPY. So if the yen's down, that means the yen's weak. JPY, we have pound JPY. We have euro JPY. We have CAD JPY. Because the yen is the second pair, that means all these pairs will be short. No, all these pairs will be long. Why will they be long? Because the base pair is weak, the other counter pair is the stronger pair. And the rule of thumb, if people are not sure, just look at the Canadian dollar, which is correlated to oil. So if the oil's up, CAD's long. So if CAD's the strongest, that means CAD yen will be long and everything else will apply. So that's pretty much it for this evening. The other part of the slides I'll make available later on. And thank you for everybody that stayed tuned and took time out of their evening for this short presentation. Although there's still some more slides, as I said, this is the second part I'm going to reveal. Leah's going to post this whole presentation on YouTube. And when she does, if you want a copy of these slides, there are 102, which I'll share them now. If you can see, there are actually 102 in total of part 1. Leave a review of how you found the session, and I'll make sure Leah gives you a copy of these slides straight away after you drop it. After she's posted the video, just tag Leah on the AudaCity app, and I'll make sure you get a copy of these slides of this presentation for this evening. So Leah, are you there? I'll take some questions and let's have a look if I can see on my side. You there, Leah?
Yeah. So I'll get started with some questions that I have taken from the app. There's a few, and then we can maybe take some after on the channel if anyone wants to add in. So our first question is from Archie, and it is tips on how to exit the market.
Okay, Archie, tips on how to exit the market. First of all, your stop loss. If your stop loss, for example, is 20 pips, you want to always make sure you've got at least 2 to 1 as a basic exit strategy. So in order to make that happen, all you have to do is, if your stop loss is 20, so 40 pips should be your very first exit level. And I did share on this presentation this evening on ways to get out of the market, how to get your take profit levels after 2 to 1. So your very basic exit will be 2 to 1. So it'll be 2 times your stop loss. And I'll just write it down here. So wherever your stop loss is in pips, multiply it by 2, and that'll be your take profit exit level. I hope that answers that question for you. Yeah. Yep. What's the next question, Leah?
So the next question is also from Archie, and it is, which indicators would you recommend are the best to trade with?
As I shared on this presentation, indicators lag, but you can only use indicators for confluence to confirm what you already know. So if anything, I'll just say use the EMAs, which takes the average moving prices exponentially with closed candle prices, So you can use, depending on your time frame, if you're on D1, you can use 821. That apply to close if you're using MetaTrader. Or you can use the 4-hour, you can use the weekly W1, which is 100 EMA. Or you can use the monthly and the higher time frame. That's put month, and that's 200 EMA. But when they all cross, then you know you got momentum with, or you can use a 4-hour where you can use 30-50 EMA. So these are the basic ones I tell people to use really and truly. But remember, all of them lag, but it's price that's the major determinant factor with the candlestick pattern on the market structure. That's what gives you the real go to execute that trade. So you're welcome to use MACD and other ones, but just use them as confluence, but not as the ultimate decision maker for you executing a trade. Yep. What's the next one, Leah?
Great, thank you, John. So the next question is from Daniel, and is, which market conditions are we looking for to accept signals on trend-based indicators such as MACD and RSI?
What market? Sorry, I didn't get the last bit. What market?
It was, which market conditions are we looking for to accept signals on trend-based indicators such as MACD and RSI?
Okay, you're looking for trending markets. Trending markets, whether they're going up or down. Avoid sideways markets. And how do you determine trending markets? As I've mentioned before, you apply Dow theory. Dow theory to determine. Can everyone see my screen? Just to be sure. Leah, can you see what I'm typing?
Yep, I can see screen.
Yeah,
if everyone else can just confirm they can see it as well.
Yeah, okay. Dow theory to confirm if the market's trending, It's trending. As you know, that consists of higher lows, higher highs, that's the uptrend. And we have lower lows and lower highs, downtrend. I hope that answers your question. So that's how you do it. So
the next question is, how hard is it to get accepted onto the Hidden Talents program?
Okay, because of time, I'm not going to go too in depth on that, but if you contact Oriel will be able to go more in depth on that. But it's not hard to get onto the Hidden Talents program. You contact Lucy Thompson or Oriel or training, as I put at the beginning of this presentation, training at audacitycapital.co.uk, where you express an interest in coming on the Hidden Talents program. And I'll look at it, then you'll be interviewed by one of the onboarding team members. And once you're approved, you sign up, you get a start date. At present, the structure has changed now. Before the Hidden Talents program, people just come on any time of the month. But just to maintain the quality and the numbers, you can only join the Hidden Talents program each calendar month on the first Monday up until the second Monday. And if you don't join by the first Monday of the calendar month, then the next opportunity is the second Monday of that calendar month. So for example, March, we have 1st of March and the 8th of March. If you've not joined between the 1st and the 8th, you're going to have to wait till April. And that's how it goes on, vice versa.
Great, thanks, John. And the last question I have here before we take a few ones from the chat is, what are your thoughts on scalping markets?
Scalping markets, I have my reservation about scalping markets. First of all, what type of trader are you? If you're a trader who hasn't got time, you just want to be in and out of the market, it's a hobby, it's a game to you, and this is just your thing, it's not your main career, it's just what you do, that's fine. But I believe if you want to be a proper trader now, you have to combine scalping, swing trading, and position trading, all three of them together. So scalping cannot just be your main arsenal of trading the financial markets. So I personally believe you scalp a little bit, but you mainly swing and you position trade and you incorporate good risk management, and that makes you a complete trader. So when a trader tells me, oh, I only scalp, I only swing trade, I don't really take you serious, because a real trader can combine all skill sets, all personalities to achieve his or her goals in terms of trading.
Great. I think that was all the questions that I've taken from the app. So, John, if you want to pick out whatever questions you want to answer from the Q&A.
Okay, Q&A. I've got quite a few. Or I have 17 open. Okay, USD is a buy, so okay. Then webinar. Okay, let's just that. Okay. Let's scroll down. Can you share this presentation document? The presentation document will be shared. Leah's going to post this webinar presentation on YouTube in probably in a day or two. And when Leah posts it on YouTube, if everybody can just leave a review or a positive comment, and once you do that, just tag Leah into it on the app or on YouTube, and I'll make sure Leah gives you the whole presentation in a PowerPoint file, and it will have the additional 45 slides I haven't shared tonight. So this presentation PowerPoint is, I don't know the word to use, it's actually value on its own. This is more or less a fraction of what I teach on the Hidden Talents program I'm sharing for free. So all I'm asking, if you like it, just show the little appreciation by leaving a positive comment, and I'll make it available to you guys for free. Do you have a ratio when looking at timeframes for our? In terms of looking at ratios of 4:1, I'll say, as I say, early bird gets the worm. So just do your top-down analysis from top to bottom, and you spot the market structure, the candlestick patterns, and you just do your risk management, and you get the low risk, high reward trades. Okay, just done that. So let's just clear a few of these questions. We've answered a few. Okay, we'd like to live. Okay, let's go that. Let's go down. Hold on. Let's see what else have we got. In your experience, do you think one can be consistent looking for imbalances in supply and demand on the daily time frame and looking for intraday events based on candlestick patterns? Yes. Supply and demand is a very powerful concept. You start from the higher time frames, from the weekly down to the daily, and you see how price reacts on the lower time frames, which is 4 hour to 1 hour. So yes, it does make a trader consistent and it gives you the edge, but supply and demand is another topic on its own, and I do kind of touch base on it on the Hidden Talents program, and I've kind of referenced a few notes on the AudaCity app as well. But in future, depending on how the demand comes, there will be courses on the AudaCity app for like supply and demand, all these things you ask. They're going to be video courses which you can pay for or subscribe to, or one-to-one mentorship sessions with me explaining these concepts. Okay, can we get a video? Can we get this video presentation? This video presentation will be put on YouTube, so it's free for everybody to watch on YouTube when Leah posts it. The only difference is the slides. If you want the slides, just leave a positive comment or on the AudaCity app on the YouTube page and tag Leah, and I'll make sure you get the slides. Okay, what else have we got? Samuel Olabode. How do reliable pivot points in trading, and which style is best used for pivot point scalping? Pivot points are just a guide, an area of action, an area of zone on the markets. So to be honest with you, it's an indicator. As I said, indicators lag. But the main thing you need to understand as a trader is, when are you going to get in the market? When are you going to get out? And what is the market structure now, and good risk management. Once you have these 4 concepts in place, you won't really be bothered about scalping or swinging. You know, because the most important thing is you know your entry, you know your risk, and you know your exit. Everything else will only complement your strategy. So the more confluence levels you have, and the more things that can validate your trade, would definitely give you a successful trade in the long run. That's Samuel. Any strategy to make some fast execution of 0.5 loss within not due to limitation of lot size, a few trades not able to place and missing returns. Any strategy for this to overcome? Yes, on the hidden FTP and the Hidden Talents program, you have 0.5 lots and 15K. You don't have to use the maximum 0.5 at one time. Even trading 0.05 at 40 pips or 20 pips will still get you consistent profits. So that's the whole point of being given 0.50 lots. We want to see your discipline. We want to see how well you can manage a big account with a small lot size. And when you get to 60,000, which is level 1, 2, 3, 4, you're going to start seeing your account growing faster and quickly. And the strategy, your strategy will always adapt, because the whole point is building discipline and consistency with little lot sizes. So once you build discipline and consistency from the 15K account, you'll be flying along to 120,000 to 500,000 like Vladislav. And looking at the current my FX book records, we have about 15 people on 60 to 100K combined together as of this year, as of the last 8 weeks. So that's a very big jump. So I expect a lot of people to be doing much more gains and percentages and hitting their targets. And I don't know what they're doing. Some of them I don't know, and some of them I know. But at the end of the day, it's all about discipline and consistency. Okay, let's see. I've answered that one. Let me just go take someone else. Daily or 4-hour time frame. This is an anonymous attendee. I'll say the daily and 4-hour, both of them are actually good to trade. I will not distinguish between any one. So it's all about your preference, really. But both of them combined together would definitely give you a significant edge. Will you? Okay, I've decided that. How come people do succeed with Audacity and any other prop firm? I personally don't understand why people succeed with Audacity and other prop firms. That's down to the individual, down to the support they have, and down to their experience. Me as a coach and as a trader as well, I've been trading the financial markets, FX specifically, from 2003, which would take me up to 18 years now and counting. So it's all about your experience, your passion, and your dedication to trading. That's what makes the difference. Other prop firms, I don't know what coaches or mentors they have, but I personally believe it's that passion and that relationship and support which makes the difference with Audacity. So I hope that answers your question there. And thank you for your prep. May I ask about time analysis? Is it worth learning? I mean, Walter Bresser's psychoanalysis. To be honest with this is, I can't pronounce your name, Zika time analysis. To be honest with you, whatever's out there on trading, learn it, because trading is a skill, lifetime skill. So I still learn different strategies and different concepts myself. So I'll never disregard or tell people not to learn a different concept. So the more you know, the more you earn. It's just that simple. So yeah, I'll recommend you learn that. I'll actually look the guy up myself. I don't know this guy, Walter Bresser, but psychoanalysis, but I'll have a look at that myself. Time bands, that's more or less the same thing. Do you have any way to move your stop loss to break even, and do you always keep your stop loss where you put it first? The stop loss can only be moved when your trade, if your stop loss, for example, is 20 pips, and your trade, you're long on the euro US dollar and you're up by 25 pips, then in that case, I'll move my stop loss to my entry level. Depending on the time frame and depending on how close I am to my take profit level. So it's a combination of things. But personally, I'll make it the example very simple. If I'm trading the euro US dollar on a daily time frame and my stop loss is 40 pips, so at 10 o'clock tonight, I'm going to move my stop loss to yesterday's swing high. At the end of the day, at 10 o'clock every night, I keep on moving my stop loss to the swing low or swing high on the relevant direction of the price, the trading direction I'm going in. So that's a risk management technique, and I do explain this on the HTP. If euro and US dollar goes up at the same time, does that mean gold will go up as well? No, if the US dollar goes up, that means gold is going to be weak, because gold is used as a hedge of inflation. So sometimes, and if you do see both of them going up as well, then you know that's manipulation, and you need to do your top-down analysis and get to the bottom of it and see what's happening with price, what price is telling you, not what fundamentals are telling you. Do you know how do you know if the currency is weak or strong? That's fine. It's very simple. Go to this website called mataf.net and go www.mataf.net, and that will tell you mataf.net. That will tell you where you get Mataf. Just give me a second. www.mataf.net. mataf.net. That'll give you the currency index. And just look for currency index. Then you can see the strength of all currencies. Any volume indicator in the recommendation, yes, on TradingView. I like to use something called POC, point of control, and you can find it on TradingView. I'm doing my due diligence with a lot of funding firms, and I want to get a clear understanding about the drawdown. Does that mean you are out of the program if you're tracing negatives to drawdown, but not physically closing a trade? Okay, basically drawdown's quite a long story short. Drawdown is when you hit the maximum risk exposure we allocate to you. So when you hit that level, there are two situations. One, if you're on the Hidden Talents program, we will review the situation, we give you a second chance, and we move you onto the FTP program where you pay a monthly fee for holding the account, and we reset the balance. And if you lose the money again on that, then we terminate the agreement. So you have two chances. But if you're on the HTP, you don't pay the monthly fee because you've been trained by myself. So we trust you with the funds. But if you're on the FTP and you violate it, that's fine. You're just going to pay a reset amount, and it's down to the risk manager's discretion. So that's drawdown. And I think I'm getting to the very last one here. Can we search for on YouTube before we video? What name can we search? Leah would be the answer. That Leah, what are you? I don't. When you post a video, what do you put? You put webinar. Is the title of the webinar for the YouTube video you're gonna post on, or is it a different name?
Yeah, it will be under John Aussie webinar, but I'm also going to send out an email again with the link whenever it's uploaded. I think it'll be uploaded at the start of next week. So I will send an email out to all of our traders. And if you're not trading with us, if you could join our app, the AudaCity Capital app that's available on Google Play and the App Store, and then I can send the link there and post it there for everyone to see.
All right. Thank you for that, Leah. Morning, what time do I start trading GMT? Well, the market's open 24 hours apart from Sunday night, Friday evening at 9 o'clock. So the market opens from 10 o'clock on Sunday up until 2100 hours GMT on a Friday. So you can trade the market whenever. All depends on your commitment, your trading plan, and your strategy. So you can trade the market anytime. Alpheus, why is order types in the bank intermat different from the ones on MT4 platform? Okay, the reason why the prices and order types are different is because we have a liquidity provider, which is Hermes, and Hermes is owned by Deutsche Bank, one of the biggest investment banks in the world. So the market maker is Deutsche Bank, so we get our prices from them. So that's that. What will be covered on the HTP? Ashcock, if you'd like to know more what will be covered on the HTP, you can go on the website. You can contact me directly through training@audacitycapital.co.uk. I'm going to type that in here. Sorry. So I'm going to put the email there for anybody who wants to contact me. It's training@audacitycapital.co.uk. Or you can follow me, John Aussie, on the Audacity app and just send me a DM. So that's all the questions on this side. On the chat, I guess you've taken all these. Sorry, Craig, just to, if you don't want to, Al Brooks, what books? Answer Al Brooks books. Have we covered the ones on the question side, Leah? Is that what you've done before? On the chat, Leah? Leah, are you there? Hello?
Yes.
On the chat, were those the questions that you covered earlier?
No, the questions were from the community app.
Okay.
So there's still some questions in the chat if you want to answer a few of those.
Okay. Let me just quickly browse through the chat. I'll just go through Croatia. Greetings. Okay. Good evening, Norwich. Okay, thank you, everybody. Hello, Sam Lacoste. Okay. I see Leah's been typing. Okay, just browse through here. Leah, okay, yeah, the content's amazing. Yeah, thank you, everybody. Appreciate the good luck. Thanks. I'm like crypto. Thank you very much, retail. Okay. Yep. Okay, pretty much. Okay, Leah, you pretty much answered everything here. I'm doing my due diligence. So, yep, these are some of the questions we got here. is it good to practice HTF today in the week evening after New York session? Yes, it's always good to trade on the the higher time frames, because you get more clarity and you get much more direction. What are my views on crypto trading? Samuel Labode. Samuel, I trade cryptos myself personally, but I have not made it public on the Audacity app. I've spoken about cryptos to the guys on the HTP off the record, but if it's something you'd like to know about cryptos, I can tell you in April, I'll be introducing a crypto course on the Audacity app and a crypto trading program as well. But crypto trading will be independent. You're going to have to get your own broker, your own capital. Audacity will not fund crypto trading on the FTP or the HTP. So I'll just be an independent course. And what that'll be, that's more or less like you working with me. I'll just show you how I'm trading crypto, and you just shadow me on the mentoring program, which that we're still working out the bits and pieces. So sometime in April, we will be launching a crypto course. We did have a crypto course in the past, only one person done it, then the pandemic happened. So I've been studying crypto on the back end of things. I've got a mentor who's teaching me crypto, and I've made a bit of money on crypto myself. So if crypto is something that'll be of interest to anybody, sometime in April, I'll be making an announcement on crypto, or I might be making an announcement on the part 2 of this session sometime in March. So pretty much, I think I've covered everything here, Leah. Anything you'd like to add to this?
No, I think that is everything. And if anyone has any questions, feel free to email me at pr@audacitycapital.co.uk, and I will try my best to get an answer for you.
Yeah, and just one bit before we go, I'll just share my contact details again. Just quickly. Any chance to pay your visit to our offices? Yes, the office is always open. I'm happy to meet anybody in the office when it's safe. And Boris releases the lockdown features. I'm more than happy to meet anyone in Shoreditch and at the Audacity Capital office. And anytime you can have a coffee, we can have lunch, you can pick my head, or what we used to do, we normally used to have like an evening sessions where people just come in random time in the evening once a month, and we talk about trading. You get to see me in person. You come to the office, I'll give a little presentation live. So you get to meet me live and you ask me questions live, and pretty much that's it. It's not behind a virtual screen. So some people have seen me in person, some people haven't. But we're working from home right now, so this is the only difference. So yes, anyone's more than welcome to come to the office. This is me again. And this is my contact email, Audacity Capital. You can follow me on Twitter. I post all my trades there now. I'm now back active on Twitter. I got an Instagram page where it's private, but I'll be making a new Instagram page, and that'll complement the Audacity Capital app. So look out for that very shortly. As soon as I create an Instagram page, that'll be public as well. So any questions, please always reach out to me. Thank you for your time this evening. And I'm kind of like missing Champions League right now, so I have to go. But Leah, thank you again for your time. Please, everyone, help me thank Leah for her time this evening. And any more questions, just drop me an email or contact Leah. If you want a copy of these slides, just please drop a positive email, a positive review on the app or on YouTube when Leah posts the video next week, and straight away the file will be available to you. And I did promise everyone that attended this event from the beginning, I'll share a trading plan. Leah, I'll make the trading plan available to you shortly. I'll send it to you if you can just share that with everybody. So anyone who wants that. Actually, you know what? I'll probably post. I think can we post app? Can we post it on the app? Leah, do you know if
I think so. Or if you can't post it on the app, you can always use WeTransfer or a link.
Okay, you know what I'm gonna do? I'm on the app. I'm gonna put the file on a Google Drive. So just click on the link and you're going to have access to that file. That's the easiest way. So I'll do that. So that link, that for everyone attending, when on the app, you see I'm going to put a little thank you note on the app. So on that little thank you emoji I'm going to put on there, I'm going to embed a link there in the next hour or two. Then you have access to that free trading plan I mentioned. And if you want the second part, just leave a positive review when Leah does that post next week. And part 2, I'll be giving a little preview of part 2. Once Leah puts the video, I'll do a little 30-second preview of what's to come on part 2 of this webinar in March. So you have an idea of what to look forward to. So yes, all this stuff is for free. I'm not charging anyone nothing. There's no money. If you want mentorship, then that's a different story. This is just my free time. So everything I've mentioned on this webinar is for free. I'm not charging anybody for anything. The fact that you guys turned up to attend this webinar and you've been attentive, I had about 70 people. I think 72. I think the maximum count we dropped down to 56 because people have been in and out, but I still have 56 people. That's still a good turnout. 56 out of 72 in total, still a good turnout. So I appreciate your time, and I'm sure Leah does as well. And like I said, let's all thank Leah for her time and efforts and what she does in supporting me at AudaCity Capital and the work I do. So guys, have a great night and thank you for your time. Leah, do you want to end the webinar or have I got control?
Yeah, thanks everyone for coming, and hopefully we'll have another webinar in the future and we'll let everyone know. So thanks very much, guys, and we'll see you on the app.
Bye.